Hello, everyone. I'm Chris Kapchis, President of Chestnut Park Real Estate, and today I'm going to present you with the March market report for Toronto and the surrounding regions. I'm not going to kind of compare this March to March of last year. It's like comparing apples to oranges. The key is to look at what's been happening in the market, particularly since we hit a low point, which was in December of last year, and see what the progression has been in the market since December. And the progression has been a positive progression. And I want to show you some charts that will illustrate what I'm saying. You'll see that in December of last year, there were 3,099 sales that were reported, and that was for the entire GTA. That's a very, very small number, and certainly a lot smaller than what we got used to during the pandemic market. But in January, we stay almost the same at 3,089 sales. But then in February, we jumped to 4,765 sales, which is a fairly substantial increase, about 54% compared to the month before. And now we're in March, and in March we did 6,896 sales. Now that's quite an accomplishment over that 4-month period. And it speaks to the robustness of the market. There's a lot of noise right now in the marketplace about the falling prices, falling sales. And yeah, a lot of that is happening. But the key is to look at what are the patterns that we're seeing. So we're seeing a pattern of increased sales on a month-to-month basis. And I'm going to forecast that we'll see an increase in April when we do the April report as well. I'm projecting around 8,000 units. Now, we've had some holidays in April, and that may impact that number, but I'm fairly confident that we'll achieve that. And if, in fact, we do 8,000 sales in the month of April, we'll be at a point where we were just after the peak of the pandemic. So it's amazing robustness, as I said, in the marketplace. If we look at average sale prices, we see the same thing. You'll see from the chart that the average sale price in December was $1,050,000. In January, it drops, as we saw a little bit of a drop in the number of sales in January to $1,037,000. But by February, we've popped up to $1,096,000. And here we are in March at $1,108,000. So as sales have increased over that 4-month period, average sale prices have increased as well. Now, I believe that sales will continue to increase at a fairly robust pace until hopefully they reach around 9,000 sales per month for the remainder of 2023. Average sale prices will not increase at that pace. The reason they won't increase at that pace is the impact of affordability. With mortgage interest rates hovering around 5% for a 5-year term, and then the stress testing, which effectively means that borrowers have to qualify at 7%, that is just making it very difficult for some people to get into the market. And certainly it's making it very difficult for people to bid up average sale prices in such a way that we're driving the market to heights that it hasn't seen before, as happened during the pandemic when, as you know from previous reports, the average sale price in February of last year reached $1,344,000. It's going to be a while before that happens. We're going to have to see interest rates come down substantially so that prices can go up. Demand is clearly there. In fact, we have overwhelming demand. And in March, anecdotally, we saw numerous properties sell in competition with multiple offers, in some case, double-digit multiple offers, particularly in desirable neighborhoods. In desirable neighborhoods, it was not uncommon to see average sale prices exceed 110% of the asking price. But the problem in those neighborhoods, as we experience throughout the market, is a lack of supply. And that's why all properties in March sold in only 19 days. That's correct, in 19 days. That's a very, very, very fast pace for properties to be selling. Reason for that is huge demand. They're just waiting for properties to come on the market. In March, we saw a dramatic decline in the number of properties that actually came to market. Whereas last year in March, we saw over 20,000 properties come to market. This year, we just saw a little over 10,000 properties come to market, almost a 50% decline. The demand is there, the supply is not. That's going to put pressure on prices. The only reason prices are going to be constrained is because of the fact that affordability is impacting what buyers can pay. So a tremendous market, notwithstanding, as I said, all the noise around the market, the actual market is moving very well. We would have even more sales to report if, in fact, we had a higher level of inventory. Unfortunately, we just don't have it. So I'm really looking forward to the April report. I think it's going to be as positive as the report that I've just given you. And I think the reports through the rest of the year are going to be that way as well, barring anything unforeseen, bank rate increase, mortgage increase going up, stress tests going up. Don't foresee any of those, but those would be the only things that might constrain the market. So until the next market report, stay well, stay safe. Thank you.